Hello and welcome to our market alert video for today, which is April 5, 2024. I am Ken Moraif. I'm the CEO and founder of Retirement Planners of America, and we are a firm that specializes in the creation of SCWPS. And if you don't know what a SCWPS is, it is the acronym for Second Childhood Without Parental Supervision. When a client of ours retires, we call them a SCWPS. We want them to go out there and SCWPS their tails off, and that's our job. So if you want to check us out, our website is rpoa.com. Now, this week, I want to give you a little update on what happened this morning. In fact, as I record this, the jobs numbers came out and they came in hot, right? The Bloomberg survey of economists said that the jobs numbers would come in at 250,000. They came in at over 300,000. So it was a big miss by the economists. Wait, you mean economists are wrong? Wow, that's never happened before. Anyway, but yet the market went up on the news. So why is that? Well, as you guys know, if you've been watching these videos, in the past, what the investors have been concerned about is the Federal Reserve raising interest rates to the sky, creating a terrible recession in their zeal to fight inflation. Well, a couple of weeks or a week ago, Jerome Powell, the Federal Reserve Chairman, said, we've changed our mind on that. We're no longer, if we have recession, so be it. We are now, if we have recession, we will lower interest rates to combat it. So the fear of recession caused by the Fed raising interest rates has been taken off the table. So now what do we focus on? Well, we focus on profits. So the jobs number comes out this morning, big number. How does that look? Well, why would companies be hiring all these people? Well, probably because they have demand for their products and services. And if they have demand for their products and services, then should they have profits to follow? Presumably, yes. And as we've said, profits drive stock prices. You could have a terrible recession. Companies are losing money all over the place. But there's this one company over there that's making lots of profits. What do you think their stock price will do? Probably it'll go through the roof. So stock prices are driven by profits. If jobs numbers are good, most likely the reason for that is that demand is high, and if that's the case, profits should follow. So our fearless forecast for this year that stocks will do well continues to be in place. We believe that. We also had our fearless forecast with regard to bonds. We think bonds are going to have a very good year this year. The dividends in the bond market right now are relatively high, historically high relative to probably the last 20 years. And so you're getting a very nice dividend there. We think that in the second half of this year, the Federal Reserve is going to lower interest rates. And when they do, we've seen it already. When interest rates are going up, bond prices go way down. And when they're down, when interest rates are going down, bond prices tend to rise. And because of that, we think that bonds will also benefit in the second half of this year from an increase in their price and the nice dividend that they're paying. So we think it'll be a virtuous thing for bonds in the second half of this year. So our fearless forecast seems to be correct so far, and we're glad that that's the case. Now, one of the things that we always believe is that you should have a strategy to protect yourself in the event that something happens. There's an old expression that the market can stay irrational longer than you can stay solvent. That's John Maynard Keynes said that. And so our belief is if you're within 5 years of your retirement or you're in the first 5 years of your retirement, if you're in that decade, it is the single most important decade of your entire financial life in our view. And protecting from big losses during that time, we believe, is job number one. Growth is important, but protection of principal is even more important. That's our view. That's our guiding principle. So we have a strategy we call Invest and Protect. It is a strategy that is designed to mitigate the effects of a big, bad bear market. In 2008, our strategy said to be in cash the entire year. Clients that followed our advice did not lose the mass quantities during the credit crisis. In 2020, when the pandemic was announced, our strategy said to get out during that too. And the market went down significantly after we got out. So we want to protect you from big losses. We want your money to last as long as you do. You know, as we say, we're not here to make you rich quick. We're here to keep you from becoming poor. There's a big difference. And so our website is rpoa.com. So again, stocks look good, bonds look good, so far so good. Thank you for watching this video. Share it with your friends, share it with your family, your business associates. We want to help as many people as we possibly can. All right, so thanks for watching, and we'll talk soon.